Thanks for joining us on the News at 1. Let's take a look at your market news now. Asian shares were mixed today as the dollar rose slightly in the wake of Wall Street's advances. But those gains were paired as investors awaited the U.S. Senate's vote on tax reform legislation. Japan's Nikkei rose for a third straight day, led by oil, steel and machinery stocks, while Sharp soared after it announced a return to the bourse's main board. The Nikkei ended 0.4% higher. Hong Kong stocks fell, with the benchmark Hang Seng Index posting its biggest weekly loss in 11 months as investors took profits from this year's rally. The Hang Seng Index ended 0.3% lower. In mainland China, a private survey showed that the country's manufacturing activity grew at the weakest pace in 5 months in November as input costs remained high and tougher pollution measures weighed on business confidence. The Shanghai Composite Index ended flat. To Wall Street now, where yesterday the S&P 500 closed at a record high and the Dow Jones Industrial Average broke above the 40,000 mark for the first time. Investors gained confidence that the Republican Party's push for U.S. tax overhaul will succeed. Republican Senator John McCain's decision to back the tax bill provided a new jolt of momentum for the legislation. The Dow Jones Industrial Average rose by almost 1.4%. The S&P gained 0.8% and the Nasdaq Composite Index added 0.7%. Trading volume was unusually high. Now for more on the markets, we cross over to Nompumelelo Siziba. She's standing by at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Over to you.
Thanks very much, Nzinga. Well, global markets are generally trading in the red. That's despite the US good performance last night. We are seeing on the all-share index also trading in negative, that the mining counters, however, have been doing quite well. This might have something to do with the fact that the US dollar did depreciate relative to its peer currencies, and that, of course, does tend to buoy commodity prices. So we're seeing all the commodities like gold, platinum and Brent crude on the rise today, for now at least. Yes, part of the reason why the US dollar actually depreciated was because there was supposed to be a vote on the US tax bill, but that didn't go through. So that created a little bit of apprehension in the markets. We're hoping that we will see a vote today, but we have to wait and see. But let's take a look at the indicators in the meantime. Well, I'm joined by Maudile Nswane. He's from Lehuma Capital. Thanks for joining us, sir.
Thanks for having me.
Good stuff.
Happy December.
Happy December to you. Just give us an assessment of how you've seen the markets perform for the month of November and even this past week, both global and local equity markets, and what has been driving them. Yeah,
look, we had a very good November. In particular, I mean, when you look overall across the globe, the big sectors that were performing were the tech sectors, the FANG, the Facebook, the Amazon, the Googles of this world. So those were the companies that were really performing very well. I mean, we had those companies reporting very, very good sets of numbers, the likes of Tencent. Our very own Naspers also hit new record. But I think what we saw towards the end of November was a little bit of profit taking, from those sectors. The tech sectors, we saw a bit of a sell of Naspers, currently trading just below that 4,000. You could see that I think investors are saying we've had a good run for the entire year in this sector, and therefore perhaps it's time to look into the other sectors, and especially those sectors that did not have a good run, but they stand to really benefit from what is coming going forward. We're talking the tax reforms. Which sectors are going to benefit? The consumer discretion, some of the financial stocks. Those are the sectors that led to the performance of the Dow Jones S&P 500 towards the latter part of November. So But you know, so that's basically what happened in November.
And in terms of the local all-share index, what's been driving that?
Look, the local index, the main driver, you know, it's Naspers, and unfortunately, we've got this one giant that's contributing so significantly into the performance of our local market that it's so skewed towards Naspers that the other companies are just not contributing much. And hopefully we could begin to see the shift of that. We need to see the other sectors coming in. But it has been a lot of pressure in the other sectors. I mean, granted, we've had lots of negatives towards South Africa, the rating downgrades, just the fact that also the performance of our economy, it's not really that great. So you likely not to see any other performance from your retailers to the financials to, you know, to all the other companies that should be really performing, especially those that are exposed to South Africa. They underperformed. We had one big giant performing very well, which was Naspers, and of course some of the resources counters did perform. I mean, Kumba, for example, up almost 70% for the year. So that's done very well, benefiting from the commodity prices that rebounded in 2017.
And I suppose that's part of the reason why we're seeing some of the commodity prices up today as well.
That's right. We've seen some weaknesses on the dollar. All those commodities are priced in dollars. You know, we're seeing a nice recovery there. In particular, oil. The OPEC meeting would have been a big focus. What they did yesterday, cutting production, you know, continuing the production cuts into the end of 2018, that certainly is positive for oil. And I think we could see, you know, a positive trajectory from here. Positive
for oil, but not positive for us because it means higher prices, right?
That's right. You know, we obviously the importer of oil, we don't produce much. So, you know, all those non-producing members will certainly feel the pain, feel the heat as the oil price continues to rise. I know that the Department of Energy is yet to publish the official numbers of how much the petrol price is going to rise by, but you can expect any increase. And it's going to be a tough December, the season where a lot of South Africans will be driving to different destinations. Petrol prices are going to be increasing, and it's not good news. Yeah,
we're hearing something like 72 cents a litre. Not very nice at all.
Yeah.
And then let's move to the UK now. You know, there's been a problem there. They've been trying to settle this divorce bill, how much the UK must pay the EU to leave.
Yeah.
And it seems as though they're ever closer to clinching that, which is positive because they can go on to the next part of the negotiations around trade, etc. So that has lifted the British pound, but because it's lifted the British pound, it's ended up being negative for stocks on the London FTSE. Just explain those dynamics, and does this mean that the UK is going to avoid what has been termed a hard Brexit?
Yeah, look, just in terms of the impacts on the stock market, I mean, even though you not really want to be watching the currency on a daily basis, you know, but yes, any strength in their currency will be negative for the FTSE, especially because you've got large dominant, you know, the FTSE being dominated by the large, commodity stocks. So the same thing when the rand is appreciating here in South Africa would be negative for our local commodity stocks. So that's the same impact. But, you know, just looking at the developments around Brexit, it's a good thing that we're now moving, or we seem to be moving closer to the next step. The whole negotiations were stuck around how much the UK must pay for the divorce. That seems like we've reached an agreement. It's a very expensive divorce. I mean, in the region of about 60 billion, 50 billion euros. That's what the number is. I don't think anybody who voted for, you know, in favor of leaving the Eurozone had that number in mind. And now the reality is kicking in, just how expensive the whole divorce is going to be. And but the good news is that we can then move away from that point and begin to talk about all the other important things, which is trade. How is the immigration laws, trade? How is the UK going to? What is the trade going to look like going forward? And I think that's what the market is happy about. That we're not stuck one place, that we can move on to the next one.
Okay. Well, unfortunately, we've run out of time and more things to ask you, but we've run out of time. Thank you so much, Maudi, for your time, as always. Well, that was Maudi Lenswane. He's the MD at Lehuma Capital. After a short break, Nzinga has more business news for you.